Hello and welcome to Legacy IAS Academy. In today's video, we will be studying about cooperative banks. Now, why are we studying about cooperative banks in the first place? Is because recently KVB or Karur Vysya Bank has been in news for its scams, for the scams associated to KVB. Okay? So, what is the scam about? There were certain fraud accounts which were opened up in KVB, and KVB delayed in reporting such fraud bank accounts to RBI. Okay. So Reserve Bank of India fines KVB for delay in reporting fraud accounts. So although KVB has reported, but there was a delay in this, so they have imposed fine on it. Okay. So basically KVB is a cooperative bank. That's why we are studying about cooperative banks. Okay. But before this, so this is a very recent incident, right, of KVB. Before this, PMC, that is Punjab and Maharashtra Cooperative Bank or Maharashtra State Cooperative Bank, they have also been in news for their failure in operation. PMC Bank had collapsed and there were continuous scams in Maharashtra State Cooperative Banks. Okay. So what are cooperative banks at the first place? What are cooperative banks? Cooperative banks are basically the banks which works on in coordination with the people. So the members will come together, members of a community will come together and they will open up a financial channel. Okay, this is basically a cooperative society. Within cooperative society, they are calling themselves as a bank. Okay, so that is how cooperative banks are formed. Now, cooperative banks itself works on the principle of one person, one vote, because profit is not their motive. They work on no profit, no loss basis. So profit is not their motive. They work on one person, one vote. So whether this cooperative society should give loan to this person or not, should we invest money in this institution or not, this entity or not, all such kind of decisions are taken on the basis of one person, one vote. Okay, and it is the customers who are also the owners of this bank. So these customers will come together, they will put this money together, and whoever needs it, that one the money will be taken out from that account, and then money will be taken out from the pool and then granted to that account. Okay. So, talking about the types of cooperative banks. So, cooperative banks can be in urban area, can be in rural area. If it is present in urban area, then it's regulator in terms of banking operations. In its task, in banking task or financial related task, who is the regulator? It is the RBI under Banking Regulation Act. Okay, RBI regulates them under Banking Regulation Act. But related to management related decisions, so how will the elections within a cooperative bank be carried out? What will be the board members? How do they take any decision? Who will be the supreme decision making authority or something like that? For that, we have, for management related decisions, urban cooperative banks we can have state registrar of cooperatives for management related decision, or central registrar of cooperatives for management related decisions, depending upon whether you are existing in a single state or in a multi-state. Okay? Now, if you are a single state UCB, then you have to register yourself as a State Cooperative Societies Act. If you are present in multiple states, then you register yourself as a Multi-State Cooperative Societies Act. So this is all about urban cooperative banks. Now talking about the rural cooperative banks. Now rural cooperative banks can be present at village level, at district level, at state level. If it is present at village level, these will be working as Primary Agricultural Credit Society. Okay, Primary Agricultural Credit Society, and they will be working as a central cooperative bank at the district level and state cooperative bank at the state level. So the same rural cooperative bank, if it is opening for a short term, then they will be called as Primary Agricultural Credit Society at village level. They will be called as at the district level, they will be called as Central Cooperative Societies, and at the state level, they will be called as State Cooperative Banks. Okay. But if they are working for a long term, okay, then in that case, they will be party to, or they will be called as Primary Cooperative Agriculture and Rural Development Banking System. Okay, Primary Cooperative Agriculture and Rural Development Banking System. And This will be state cooperative agriculture and rural banking system, rural development banking system. So this is how they will be functioning in long term. Okay. So that is the classification of urban cooperative banks and rural cooperative banks. Now talking about the importance of cooperative banks. Now cooperative banks, as we discussed, it consists of all the members of a particular community. They will pool money together and grant loan accordingly. Okay. So the importance here is last mile financial connectivity, last mile financial inclusion can be carried out. So extension of credit to agriculture as well as rural sector can be carried out through these cooperative banks. Because in this case, it is not a proper formal financial institution like a scheduled commercial bank or a non-scheduled commercial bank. This is a bank amongst the people, created by the people. So the members, because the members are also the owners of it, so that you can get an easy access because you know the members very well. Okay. Secondly, they also help in, because last mile financial inclusion is permitted through or allowed through, seeped through cooperative banks. So finances can now enter into either SHGs, that is self-help groups, or micro and small medium enterprises. Small enterprises tak bhi finances can, formal financial channels say finance can reach. Okay. Plus, because it is owned by because the customers are also the owners of this bank, so decisions are taken collectively, and collective decision ka sabse bada advantage is it is democratic. So all the decisions will be taken via consensus, via democracy. Okay. Plus, they will also be prioritizing on needs rather than profit. As we discussed, they are working on no profit, no loss basis, right? So they are focusing on who needs what. If they are in urgent need of somebody, then they will be suddenly, all that money will be suddenly available for that person. So they are prioritizing the needs of the members rather than the profit making. Okay. Plus, overall community development can occur, and most importantly, it is the socio-economic development. And we have witnessed this, that if the cooperative banks in an area is strengthened, then the last mile financial inclusion can be carried out, and it has led to strengthening of the rural development. Okay. For example, that in Gujarat. Now, another advantage of having a cooperative bank is they are very much resilient to economic downturns, because the kind of people that they are giving loan, or the kind of money, the amount of money with which these cooperative banks are handling, these are quite small. So relatively, if any bank collapse, they are still the beholders of some amount of financial inclusion, right? So they can help in overcoming out of in a kind of economic downturns. So last mile mein finances will not get affected, economy will not get affected if we have a strengthened cooperative banks. Now coming to the challenges associated to a cooperative bank. So what is the challenge? We have often heard that there are so many financial scams associated with, for example, failure of PMC bank itself, opening up of fraud accounts in KVB. Okay, so these are some of the financial scams. Plus, because the board members are also the borrowers, so it comes as a conflict of interest. So everybody will try to, so all the board members will try to seek the money which was pooled. Okay. So there is a conflict of interest because the board members are also the borrowers, because everybody who are the members of board are also the one who are seeking money from this pool. Okay. Plus, their capital adequacy ratio. Capital adequacy ratio is an indicator of how much risky your loans, how much loans you have given to risky customers. So their capital adequacy ratio is poor, because we are expecting कि rural areas में और MSME में और SHG में they are bound to become an NPA. ठीक है? They are very often they turn out to become an NPA, which shows कि their capital adequacy ratio is low, or the customers are mostly non-performing assets. Okay. Plus, corruption and black money transactions are also quite high. Okay, because it is an easy access, easy flow of money, no big barriers, no verification. So that also leads to such kind of corruption and black money transactions. Okay. Plus, politicians also make use of this channel for siphoning off their money. Okay. Plus, regulatory challenge. So we have studied कि for banking operations they have RBI as their regulator. For management operations, it is the state government which is their regulator. So basically, it is not one agency which is acting as a regulator of these cooperative banks, because it is multiple agencies who are regulating these cooperative banks. So that creates conflict. Okay. Plus the infrastructural challenge, the kind of software that they're using, the kind of verification, KYC documents or digitalization that they are undergoing is quite poor or quite outdated. So these are the challenges associated to cooperative banks. Now with that, we come to the end of this topic. I wish you all the very best and thank you so much.